we have different entry models, and the first one we learned was entry model one, which was the name is 14B entry. 14B entry model. The 14B there means 1 hour, 4 hour breakout. That's why it's called 14B. Yeah, I gave it that name. Now, in the 14B entry model, it was 1 hour reject 1 hour, 1 hour create resistance or support, and 1 hour breakout. Then our entry is on the 1 hour weak equilibrium. Well, we have 4 hour reject 4 hour, 4 hour creative resistance or support, 4 hour breakout. Then we have our entry on where 1 hour support or resistance inside 4 hour support or resistance FTFL box, then the 1 hour equilibrium. Remember, your 4 hour support or resistance will be your FTFL. You move down to get your STFL, which is going to be the support and resistance you'll be getting on 1 hour. Then inside that 1 hour, you get your equilibrium. That's how we pick the trade using the 14B entry model. So today we'll be covering the D1W4 entry model. This is the final entry model you'll be learning. D1W4 entry models. And how do we use these entry models? The D there stands for daily, the 1 there stands for 1 hour, the W there stands for weekly, the 4 there stands for 4 hour. That's how we got the name D1W4 entry model. And how does this entry model work? One, the first time we're using it on 1 hour, 1 hour must mitigate 1 day key level. And the mitigation must be either a week, 1 hour week, or one single candle from 1 hour. Then we see 1 hour breakout. Then after 1 hour breakout, there are two ways we get our entries when we are using the D1W4 entry models. Either we pick our entry on the 1 hour support or resistance equilibrium, which is the best and the strongest, or we take an entry from the 1 hour equilibrium, 1 hour QM equilibrium, which is not as strong as the 1 hour support or resistance equilibrium. Also, the D1W4 entry model can be used on 4 hour also. And how do we pick the trade on 4 hour using the D1W4 entry model? 4 hour must mitigate 1 week key level with what? With 4 hour week or just one 4 hour single candle break. Then 4 hour breakout, 4 hour must do a breakout. Then we have two ways we enter the trade. The first and the strongest way to enter the trade, our entry is going to come from the 4 hour support or resistance. Then we mark our FTFL on that 4 hour support or resistance. We move down to 1 hour to get our STFL, which we are going to look for support and resistance also on the 1 hour SFL. Then when we got in our SFL on 1 hour, we mark the equilibrium to use. The second type of entry is going to come from the 4 hour QM, which is going to be our FTFL box. Then we move down to 1 hour to get STFL. When you get the STFL on 1 hour, then we use the equilibrium from 1 hour. So that's simple how to use it. This is daily key level here. This is a daily key level here. So in this daily key level, we have our storyline already, which is everything is bearish. The D1W4 entry model can be used for retracement. You can use it to catch a retracement. Note, you can use it to catch a retracement. And you can also use it for confirmation, where the market did not get to your TTFL. It can be used for confirmation when the market did not get your TTFL. And it can also be used for retracement or pullback entries. Now, we have this daily RBS here. The market came and tapped it. So since it's on daily, I'm going to go on 1 hour to look for entries. As you can see, remember the rules for taking this trade. What is one of the rules? The rule is that we don't need, there should not be more than one candle breaking this key level. And as you can see, it's just one candle that broke the key level on daily. And what did the rule say? The rule said 1 hour mitigates 1 day key level with a week or one single candle. And this is just one single candle that broke it and that one came up. So that rule is fulfilled here. After that one, what else are you looking for? We are looking for a breakout. And this is where the breakout occurred here. And after the breakout, what did we expect? We expected the market to come to equilibrium here on the 1 hour. This would have been our perfect entry. And now when you enter the trade here, another issue will be when you enter the trade, because sometimes you'll be seeing this setup on a pullback, and a pullback is not you following the current storyline or trend of the market. So if I should take my trade here, and this trade is a pullback, where will I take out my TP? You go to daily, because this entry is coming from a daily. You look for the closest daily key level. And if I look at this, when the market was here yesterday, the closest key level was where? Was this high here. This high here. That was the closest key level to the market. Because remember, when you take the trade on 1 hour, that means you're taking your key level from daily. Your TP should come from a daily closest key level. Now, when taking the trade on weekly, that means you're taking the trade on a weekly key level and you're taking the trade from 4 hour. Your TP should come from where? A weekly closest key level. That's when we are using it for pullbacks. But when you're using it for confirmation, you allow it to run to your recent high or low. So this was where I was expecting the market to come to, and this market came here, despite the market did not trigger us in this very trade. The market did not trigger us in. Despite the market did not trigger us in this very trade, it still came to this area. We wanted to take our TP. And this area was another area for entry here again, which we missed. The market did not come there. Now, if the market does not get to your your entry, what should you do? You're to do nothing. Because if the market is always picking you in every time your setup forms, that means everybody in the market would have been a billionaire by now. So because you see your setup and you're waiting for your entry, it's not a must or guarantee that market will get to that area. And when you're trading advanced MSNR, you hardly take losses, because either the market will not come to your entry or the market will come to your entry. It's not all the strategy that will be taking numerous losses. No. Either the market will come to your entry or the market doesn't come to your entry. The only time the market will come and take it out, itself, is only when the market wants to change storyline, as long as you're trading the MSNR correctly. So we had this. Remember, the market is still bearish. This market is still bearish, despite we had this push up. When we had this push up here to this point, but the market was still bearish. There was a rejection. There's no breakout. That means the market is still following the bearish storyline. What you should be doing is to look for sells. The only time I start looking for buys is if the storyline changes. As long as your storyline is right, rejection doesn't mean that there is a change in storyline. Remember, as you're using this model, this D1W4 trading model, entry model, doesn't mean that rejection on daily and a breakout on 1 hour, that doesn't mean that the storyline has changed. It doesn't mean the storyline has changed. That's why I said this entry model is used for confirmation entry and for retracements or pullbacks. Pullback and retracement is the same thing. Confirmation entry or retracements, that's when you use this one. This is the D1W4. Why the 14B entry model? We use it for confirmation entry also. Use it for continuation entries also. There was a rejection on this on daily breakout on 1 hour. We waited for the market to come here, but did not come. So the market went up here, got to our key level. Remember, this market is bearish. So if I get a D1W4 entry that corresponds with my storyline, what do? I start trading based on that direction. Now we got to daily here. Daily was daily rejected here. If I move down to 1 hour, this was a rejection. what's the rule of that strategy? That entry model is that rejection must be a weak or just one single candle. So that's what the market did. And there was a breakout here. What was the right place to take our trade was this resistance here. Now, if you wanted to take a trade on this on this QM, would have still been better. But you take at the equilibrium, you might have been out of the market. But this is the best bet to take your trade here. This was the best bet. QM also works. Doesn't mean it's going to work always, but these are the two places, here or here. So if I want to take my trade was supposed to come from here and also here. Which entry model is this? This is D1W4. This is not 14B entry model. This is D1W4 entry model. And this one corresponds with our storyline. What did we do? We went all in. Here you go all in. Here you go all in because you know what is getting to your TP. Now, I remember in the class in our last class, I talked about we taking TP. Entering here or entering here, where will I take my TP? This trade is coming from a daily key level. I'll go back to daily time frame. There's an obstacle here. So I can take out my TP here or allow it to run to the previous day low, like we discussed in the last video. So this was the obstacle which the market came here very well. Now that the market has ended this week, what should we expect next week? Now there's a rejection here. Remember, the market is still bearish daily. You see this rejection here? There's a rejection here on daily. Now on 4 hour, is there a breakout? There's no breakout. Only if the breakout happens here, that means daily is now bullish. But for now, there's no breakout. Then I go to 1 hour to check if I'm going to see the D1W4 entry model. Is there any confirmation for me to trade D1W4 model? No, because a breakout here, until I have a breakout here. If I have a breakout here now, if I have a breakout here, then the market comes back. That's when I'm going to enter here. You see that? That's when I'm going to enter here. But as this market is moving, you see this, there has been, okay, this one is not valid for me because the entry model says what just one candle must break, not multiple candles. Despite this one is just one and a little half, I won't consider this one. Okay, we had a rejection here on daily. So after the rejection on daily, what did we get? Let me go to 1 hour. There's a rejection there. At that point where we had that rejection, the market was on a bullish storyline. The market was bullish. Weekly is still bullish, as you can see. It was on a bullish storyline. But you see that D1W4, I said it can be used for pullback or confirmation entry. So this entry here was supposed to be a pullback. Now, I'll discuss where the pullback was going to get to later, but for now, let's look at the D1W4 model. So here there was a rejection on the daily with a wick, and there was a breakout. This was the breakout here. This was the breakout here. Where was the best place for us to sell? Was here. Here is the best place to sell. And also this QM here was these two places. Now, this QM is not as strong as this support and resistance level. QM is not as strong as support and resistance level. But why do I include the QM? Because sometimes 20% or 30% of the time, the market might decide to use the QM. So I don't want to miss out when the market is using the QM. I don't want to miss out when the market is using the QM. That's why I added the QM. But to clarify everything, the strongest level to use on the D1W4 entry model is the support or resistance. When taking a trade from the QM, make sure if you're risking $100, put in 20% of your risking amount in that very QM. Then here should be where you're putting in all your whole entry amount, this support. Now, after this, and the market broke, came down. We still take our equilibrium from this level to this level and still enter the trade here. Use our 55. You can still use 60 as you're starting now. Let's use 60 since you guys are starting now. Let's 60. Let's now we use 60. Using 60, where will I take out my TP? Because I'm not trying to take out my TP here on this one um swing low because this trade is coming from daily. I'll go to daily to see the closest key level to that point. So if I'm coming down from here, the closest key level here was this candle was once forming. So this was not a key level. So the closest key level was where this OCL here. This OCL was a key level, and also the previous, let's say it was the previous week low. You see that after the previous week, before this previous week low, we also had this OCL here, this one lap OCL, which was also valid for us to take out our TP. You see that we also had this obstacle here, weekly obstacle. Remember our daily obstacle. Remember our trade is coming from daily. So daily obstacle is also perfect to resist price, but I'll just take it to here. This previous day open. This is the previous day. Either I use the previous day um low or I use the previous day open. If it was a bearish candle, I'll use the previous day low or a previous day close. But since the bullish candle, previous day low or previous day open here, which was 1:12. Then remember, this market was a bullish market, as of this time. It was a bullish market. So holding this trade, the D1W4 was coming as a pullback or as a retracement. So since it's coming as a retracement, you're not expected to hold this trade as if you are trading a market that corresponds with all your storyline. So taking out the TP here was perfectly okay. You see that we had a rejection because this entry models works like magic doesn't mean the market will always come to your entry always when the entry model presents itself. We had a rejection here on daily. That was a daily rejection. This was a daily rejection here. Daily reject, daily reject. Okay, this was a daily resistance. We are not doing daily reject in this entry model. We are doing 1 hour and 4 hour. So this was the daily key level, which was a resistance. And on 1 hour here, we had a rejection. You see that this was a rejection. I was waiting for this trade today. I wasn't even around, but I placed my entry already. This was a breakout here, breakout here. You go to the line chart, you see the breakout. You can also use one as a breakout. So after the breakout, I was waiting for the market to come to my equilibrium here, resistance equilibrium. I was very sure the kind of amount of money I placed in this trade, had it been the market tapped me in by now, would have been like 5K profit by now. But doesn't mean that the market will always come to your entry because you saw a setup. So now, where will I take my TP out? Remember, during this trade, daily is bearish, weekly is bullish. So this entry matches up with weekly storyline. So that means it's going to rally for a long time. But I'll still stick to the principle using daily key level. So since we've gotten this here, this was the key level here for us to use on daily. Remember, when you take the trade from daily, you look for the closest key level. This was the key level here. That place was the key level and also would have acted as a what? As an obstacle. If this market closes the way it is now, that means you're in a bullish storyline because you have daily. Remember the rules of storyline: X reject X, Y breakout, or X reject X, X breakout. So this is a daily reject daily and a daily breakout. So the market is if today ends like this, yeah, in a bullish storyline on daily. So placing this TP here, and we went back to our 1 hour. This would have been where we go out of the trade. There are some weeks that you'll be seeing setups like this, and all the setup will be tapping you in, tapping you in, tapping you in. There are some weeks the tap you see your setup, but they won't tap you in. So the week they don't tap you in, you don't need to disturb yourself. Just allow it to go. And I forgot to say something. When marking your when you're expecting a high, a breakout, if this is your key level, and the lower time frame, 1 hour, 4 hour is approaching that level, the high, the high or low that will cause the breakout must be formed before the market mitigates that higher time frame key level. This is valid. If you have a key level up here, the low that will break out must be formed before the market breaks out. This only when it's valid. If you have something like this and break, this is not valid. If you put your money here, you will lose. The same thing with this one. You have something like this after the mitigation. That's when it creates this. You put in your money here, you're going to lose. So these are the only valid setup. The high and low must be formed before the market mitigates the higher time frame key level. So I just remember this one because I knew I took this trade on GBP USD. I remember this. So let's go back to daily because the key level was low. It was this key level here. This was the key level at this point. That was it. I remember this trade. I do remember most of my successful trades. So now that we had that rejection, you see, we had the rejection there. And after the before the rejection, we had this high. You see that we had that high and it broke. There was a breakout. So my entry was supposed to come from where? From the equilibrium here. There's a little with the equilibrium. Or I use my this one here, equilibrium from here, which the market used. The market used the QM. You see, this is one of the time the market uses the QM. So I didn't mean I was using only I was using only resistance or support of that means this one. Entering here doesn't mean I'm going to take my TP out from this high here. It's 1:10. Yeah, it's good. 1:10 is good, but that's not how I trade it. I go back to daily since I'm getting I'll go back to daily since I'm getting this on daily. I'll now check. This is where my trade is coming from. Where is the closest key level there? We have this one, 1:27. We also have a resistance here, which is going to be 1:16. But I stick to this and go back to 1 hour. Yeah, you see, the market didn't even take long. It came to that place. So this is how we trade these things. And I'll repeat again finally, because you see your setup doesn't mean the market is going to come back to your entry. Just like so finally, the this is the entry models here. That's the entry model. That's the entry model. And in the entry models, you can see I made it very simple. D1W4 entry model. 1 hour mitigates 1 day key level with weak or one single candle. 1 hour breakout. Entry on 1 hour support or resistance QM. This is the strongest here. Very strong. I'll call it 100% strong. 100% strong. Why? If you don't want to miss out when the market wants to use the equilibrium, you can use this one. I'll call it 50% strong because it's not as strong as the first one. Then we have the one for 4 hour, which is 4 hour mitigates 1 week key level with weak or one single candle. 4 hour breakout. Entry on, already 4 hour FTFL box. You look for your STFL on 1 hour. When you get your STFL on 1 hour, that 1 hour you mark your equilibrium. That's it. You can look for the same thing on the 4 hour QM.